Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your morning European session outlook. We'll start with the North American markets. We had the upbeat Canadian data, CPI month-on-month 0.1% better than expected at 0.2% and year-on-year at 1.5%. Bank of Canada CPI core month-on-month was as expected at 0% and year-on-year 0.1% better than expected at 2.1%. And the retail sales from Canada month-on-month came out 0.2% better than expected at 0.2%. The market manufacturing PMI in the US was 1.3 better than expected at 52.9. The US dollar has advanced for 5 consecutive weeks. Heading into the new trading week, it is immediately apparent that if there is going to be any major move, it would be from Wednesday onward. The top event for the global financial media is Wednesday's FOMC rate decision. There is a little chance that the Fed hikes at this upcoming meeting, with even the Fed Fund futures 10% probability looking quite generous. The Dow Jones is 5 points up Friday, Nasdaq 22 points up, Dixie only slightly down to 97.34 from 97.39. The biggest mover was USD CAD 55 pips up. The event for today that we have is the Dallas Fed Manufacturing Business Index for July. Besides the Fed's monetary policy and interest rate decision on Wednesday, we also have durable goods orders as an event. All right, on to the European markets. European stocks and the euro were a little changed after Markit on Friday released flash readings on eurozone manufacturing and services activity data for July. Its manufacturing purchasing managers index came in at a 2-month low of 51.9, below the estimate of 52.1. The euro USD had been little changed after the data, but eventually fell to 1.0965. After the ECB decided to leave monetary policy unchanged last week, the bank expects its interest rates to remain at the present level or lower for an extended period, and it plans to continue its bond buying program until at least March 2017. However, the downside inflation risks is something which can lead the ECB to ease policy again at its 8th September meeting. The UK markets, we had an event on Friday, the Markit manufacturing PMI 0.9 worse than expected at 49.1, and the Markit services PMI 1.8 worse than expected at 47.4. The sterling's recent recovery run has been halted after data from the manufacturing and services sectors of the economy contracted following the Brexit vote on June 23rd. The readings are seen as an indication of how the separation from the EU will affect the UK economic climate. The poor performance in both sectors fueled speculations that the Bank of England will be cutting interest rates in the month of August. The pound fell with 0.8% versus the dollar and 0.1% versus the common currency. The FTSE 100 gained 53 points and closed at 66.78 on Friday. The GBP USD is 125 pips down on Friday, 215 pips range, and the GBP New Zealand dollar 180 pips down on Friday, 345 pips range. Those were the bigger movements. On Wednesday, we'll have the GDP quarter-on-quarter and the GDP year-on-year. On Friday, we'll have the GfK consumer confidence, the consumer credit, and mortgage approvals. All right, on to the Asian markets. On Monday, we had some Japanese news this morning. We had exports come out 4.2% better than expected at 4.2%. And the Japanese imports 1.1% better than expected, 5% worse than previous at negative 18.8%. The Japanese merchandise trade balance total 198 billion yen, better than expected. And the Japanese adjusted merchandise trade balance for June 40.6 billion yen, better than previous at 335 billion yen. Thursday, we're going to have Bank of Japan press conference. It's going to be very important. And Friday, Bank of Japan monetary policy statement, Bank of Japan interest rate decision, and unemployment rate, jobs applications ratio, industrial production preliminary, and CPI. The diverging paths between the FOMC and the Bank of Japan may encourage market participants to adopt a long-term bullish bias for USD JPY, but the fresh batch of central bank rhetoric may heavily impact the near-term outlook should the policy statements show a greater willingness to retain the status quo. And the last sector is the commodities. The Baker Hughes oil rig count increased by 14 to 371, the fourth straight weekly rise and the seventh increase in 8 weeks. Gold prices declined on Friday, ending the week close to a 3-week low as renewed expectations for a Fed rate hike later this year boosted the US dollar, and as investors looked to buy. Oil futures ended Friday's session at the lowest level in nearly 3 months as concerns over a global supply glut intensified after data showed that the US oil rig count rose for the fourth week in a row last week. The renewed gain in US drilling activity fueled speculation that domestic production could be on the verge of rebounding in the weeks ahead. Underlying worries over a supply glut. Oil prices held near 2-month low on Monday amid worries that a global crude and refined product glut would weigh on markets for some time to come. The S&P 500 index had a range of 14 points at 2165 now. Gold had a range of $13 down to $13.18 now. Silver had a range of 40 cents. It's at $19.50. Crude oil had $1.20 range down to 44.13. Natural gas is trading at 2.78 at the moment with a range of 16 cents. And that's all for the outlook today. Thanks for the attention, and I'll see you next time. Goodbye.